Here we are talking about functions of accounting. There are quite many functions of accounting, but they are normally categorized into two types: historical functions and managerial functions. So, what are historical functions? Historical functions are functions that deal with recording of business transactions. So, what are they, and how do historical functions help the business? These are the importances under historical functions. Remember, functions are categorized into two categories: historical functions and managerial functions. So under historical functions, actually when they ask you, say the two functions of accounting, the major functions of accounting are historical functions and managerial functions. So for the purposes of learning, historical functions include recording and managing journal of all monetary transactions. For example, that means money transactions. Historical, for example, if you did a transactions today, and you will need that transaction in the next month to determine how the business is performing. So in determining how the business is performing, let me say in June, yet you recorded the transaction in Jan, the time from Jan to June, that's what they call a historical time in accounting. So that's one of the functions. The second function under historical functions is posting of all transactions in appropriate ledger accounts. That's it, because all business transactions are posted to be used after some time. Classifying of records in different ledgers. I'll describe what a ledger is in my next video. What does a ledger mean? Then summarizing for hassle-free reviews. For example, if you want to review like how the business is performing in terms of cash flow and cash outflow, that's a function of historical function. Then finalizing of accounts to know the financial performance of the business. You realize with historical functions, it's all about what you've recorded and what you're using. Those records, you're using them after a time. So that's historical. So you won't see the difference between historical functions and managerial functions. With managerial functions, we are basically dealing with the day-to-day running of the business. That's what you should understand with accounting. Once somebody tells you about management reporting, managerial accounting, that indicates the day-to-day running of the business. So what are they? The managerial functions in a business, they help managers take decisions. These decisions that help in the day-to-day running of the business. Those are the managerial functions. So how does accounting help in managerial functions? What are the functions of accounting and managerial? You get my point? So one, forming plans. They help in forming plans. Secondly, controlling financial policies, because it's from the reports that you'll see and you're like, you know what, we reduce this expenditure or we reduce these assets. That's what they call financial policies. Each organization has its own financial policy. There's an organization that will tell you, for us, our policy is to use more debt. Another organization will have a financial policy of using more equity. So that's where but they all come from managerial functions of accounting. Then another point is preparation of budget to obtain approximate value of future expenditure. That's where our projections come in. As I explained in my previous videos, I'll come and I try to project one number. I want to start calculating numbers, so I'll try to calculate for you guys how they forecast or project expenditures in accounting or profits. Then another point is controlling the cost, comparing the cost and work efficiency. Since I've told you that managerial functions, that are basically for the business, to enable the business run in the activities, the daily activities. So this is where the point comes in. Controlling the cost by comparing the cost and work efficiency. What are you gaining vis-a-vis what are you incurring? That's what the thing is meaning. So that's why you break it down and you're like, the costs, if you're getting a lot of costs, and what you're gaining is the work efficiency is far less than what you're putting in, then a decision has to be made to either reduce that activity or to stop it there and then. I want to come and explain. I want to bring another video about what they call product life cycle, and how a product life cycle works, and how product life cycles are changed, and how products are stopped in the production life cycle because they no longer make profits, or because the costs are high when you compare with the profits. Then the other point is evaluating the performance of employees. How do they evaluate the performance of the employees in managerial functions? One, there is normally what we call a clock in, clock out. It's normally used in HR department, but also finance uses it. They normally calculate people's wages using a clock in, clock out. One of my videos, I'll come and elaborate how a clock in, clock out works as an organization vis-a-vis calculating somebody's salary. So, evaluating performance of the employees, they use such systems, clock in, clock out, to see, okay, fine, if the employee has worked, the system shows he has worked 24/7 as per the contract, and you come to calculate the costs you're paying the employees vis-a-vis the amount of work they are doing. You don't see value. For example, an employee may come at work. He comes at work around 7 a.m. He works up to 5, and you pay him per hour, let me say $20, and but the work done, you'll never see the work done until you get a report, and those managerial reports help. A clock in, clock out report, that's a managerial report. In accounting, those reports are normally used in payroll calculation. So you won't look at the payroll, and you look at the work done at the end of the year, which is normally the profits. So you have to take a decision in those two, and you see if it doesn't make sense. Then analyzing errors and mistakes of past transactions to make them accurate. Because what will happen here is there will be a comparison of reports, the previous month report and this month's report. Let me see a cash flow report of the previous month and the cash flow report of the current month. So they will gauge and see what went wrong. Why is there a big difference in these two cash flow reports? That's basically it with these two functions. And as I said at the beginning, a question might come and it's like, state that two categories of functions of accounting. There are two: managerial and financial and historical functions. So then under each historical functions and managerial functions, that's why you break them down. Yeah, so basically those are the functions. There are quite many, but these are the major functions of accounting. Remember, we have functions, we have roles, we have objectives. Those two things are different. I mean those three things. So mainly people confuse the functions and the importance of the roles. They are two different things. So you better take note of that, and it will help you in answering your examinations. So basically that's it today, guys. Thank you for watching. Please subscribe to the channel, like, comment. I'll see you in my next video. Thank you.